So, you did it. You saved your first $1,000. Seriously, that is a huge milestone. So first off, congratulations. But now you're probably asking, what's next? How do you make that money actually start working for you? Well, in this explainer, we're going to break down exactly that. The smartest way is to turn that cash into a real investment for your future.
Right, you've hit that $1,000 mark. But looking at all the options out there, stocks, crypto, whatever else, it can feel, well, pretty overwhelming. Don't worry though, we're going to cut through all that noise and make this really, really simple.
Okay, first things first. Before you even think about buying a single stock or ETF, we have to build a solid foundation. I know, it's not the exciting part, but so many people skip this, and trust me, it is absolutely essential for your long-term success. And maybe more importantly, your peace of mind.
And that foundation comes down to two non-negotiable first steps. Number one, you've got to define your goals. You have to know what this money is actually for. And number two, you need to build an emergency fund. Think of these two things as your financial armor before you even step onto the investment battlefield. So about those goals, your timeline is everything. It dictates your whole strategy. Are you saving for something coming up soon in the next, say, 1 to 3 years, like a big trip or a down payment? That's a short-term goal. And for that, your investments need to be safer and easy to access. But if you're thinking long-term, like 5+ years down the road, maybe for retirement, then you can really focus on growth and take on a little more calculated risk. Now for that second foundational step, the emergency fund. This is so important. Before you invest the full $1,000, a really great starting point is to peel off about $200 or $300 and stick it in a separate high-interest savings account. This is your safety net. This is the money that keeps you from having to sell your investments at the worst possible time just because your car broke down.
All right, foundation is set. You've got your goals in mind. You've got your emergency fund started. Now we get to the exciting part. Actually building your portfolio. Let's look at the best options for putting the rest of that money to work.
For most beginners, honestly, the single best place to start is with something called an ETF, or an exchange-traded fund. The easiest way to think about it is like a shopping basket. Instead of running around the store trying to pick the single best apple or the perfect orange, you're just buying a pre-made basket that has a little bit of everything in it. With one click, you can own a tiny piece of the entire U.S. stock market. It's the ultimate tool for instant diversification.
So how do these baskets stack up against trying to pick individual stocks yourself? Well, with ETFs, you get that instant diversification, which makes them way simpler and generally lower risk. Individual stocks, on the other hand, yeah, they have that incredible high reward potential, but they demand a ton of research and come with much, much higher risk. You could find the next big thing, sure, or you could end up picking a total dud.
Now, beyond stocks and ETFs, there are a few other ingredients you could add to the mix. You've got bonds or T-bills, which are much safer. Think of them like a loan you're giving to the government that pays you a steady, predictable interest rate. Then there are REITs, which let you invest in big real estate projects without the headache of actually being a landlord. And of course, there's crypto. It is the absolute definition of high risk, high reward. So if you're going to dip your toes in, it should only ever be a very, very small slice of your portfolio.
Okay, so we've covered all the different ingredients you can use. But now for the real aha moment. Let's pull all this theory together and look at a concrete, tangible example of what a beginner's portfolio could actually look like.
Theory is great, right? But seeing it all laid out is what really brings the clarity. So if you were investing that $1,000 right now, how would you actually break it down? Let's get specific.
Okay, here it is, a practical sample portfolio. You see the largest chunk, $400, goes right into an S&P 500 ETF. That's your core, giving you a piece of the 500 biggest companies in the US. Then we'll add $200 to a global ETF because you want that important international exposure. For a little more growth potential, let's set aside another $200 for a couple of individual stocks that you've really researched and believe in. Then for stability, $150 goes into safer U.S. Treasury bonds. And finally, just $50, a small speculative play in something like Bitcoin or Ethereum.
And when you look at it visually like this, you can really see how it creates a balanced portfolio. That big 40% slice is your stable U.S. market core. The two 20% slices give you global reach and a chance to pick a few individual winners. That 15% in bonds acts as a nice stabilizer, and that tiny 5% slice for crypto, that's your what-if bet. This is the kind of balance that really helps you manage risk and lets you sleep at night.
So you've made your first investment. That's fantastic. But listen, the real magic of building wealth happens over years, not days. So in our final section, let's talk about the habits that create true, sustainable, long-term growth.
You have to remember, investing isn't a one-time thing. It's a lifelong habit. First, always keep your fees low. Choose a reputable broker that won't eat into your returns. Second, be tax smart. Usually holding an investment for over a year is way better for taxes. Third, stay consistent. Just keep investing a small amount regularly. You should also reinvest your dividends. That's how you let your money make more money. And probably the most important tip, do not panic when the market dips. See those moments as buying opportunities, not a reason to sell everything.
In the end, that first $1,000 is just the beginning. It's the seed that you've just planted. And by setting a solid foundation, diversifying wisely, and building good habits, you're giving that seed everything it needs to grow. So the real question isn't just what you did with it today, but how will you continue to nurture it so it can flourish into something truly significant for your future.